In the world of finance and technology, major shifts are occurring that could reshape our economic landscape. From significant cryptocurrency market movements to groundbreaking regulatory changes, the implications are profound. Here are today's top 10 stories you need to know. Gold prices have seen a sharp increase, with SJC gold bars now selling for up to 143 million VN per ounce. This rise has been attributed to heightened economic uncertainty and increased demand for safe haven assets. Analysts have noted that gold often performs well during times of market volatility, as investors seek stability. The current price surge is reflective of global trends, where many look to gold as a hedge against inflation and currency fluctuations. Moreover, with ongoing geopolitical tensions, the allure of gold as a reliable store of value continues to grow. In the upcoming weeks, market watchers will be closely monitoring gold prices to see if this upward trend can be sustained. The question remains whether the demand for gold will stabilize or continue to fluctuate based on global economic conditions. New Hampshire has announced significant strides in cryptocurrency regulations, implementing new protections for digital assets and introducing a Bitcoin bond. This move is seen as a proactive approach to establish a secure framework for cryptocurrency transactions and investments. The state aims to attract crypto businesses and investors by fostering an environment that encourages innovation and security. Such measures are crucial as many states and countries are still grappling with how to regulate digital currencies effectively. As New Hampshire sets a precedent, other states may follow suit, potentially leading to a more unified regulatory landscape across the United States. The impact of these regulations will likely unfold over the coming months, influencing both local and national cryptocurrency markets. Stakeholders in the crypto community are keen to see how these regulations will affect broader adoption and trust in digital currencies. Elon Musk has made headlines again with his prediction that money may become irrelevant in the next decade, particularly in relation to Bitcoin and other cryptocurrencies. His comments come as the cryptocurrency market approaches a staggering valuation of nearly $28 trillion. Musk's insights have sparked discussions about the future of currency, with many speculating on the impact of major tech companies entering the financial space. This prediction raises questions about how traditional banking systems might adapt to a world increasingly dominated by digital currencies. The potential for cryptocurrencies to disrupt conventional financial systems cannot be understated, and as Musk continues to influence market sentiments, the financial landscape may shift dramatically. Investors and financial institutions are advised to stay alert to these developments as they could herald a new era in monetary transactions. Recent data highlights significant price movements for Bitcoin and Ethereum, two of the most influential cryptocurrencies. Bitcoin is currently fluctuating around crucial resistance levels, indicating a potential struggle for upward momentum. Meanwhile, Ethereum is gaining traction in the rapidly expanding decentralized finance (DeFi) sector, attracting interest from both retail and institutional investors. The price dynamics of these leading cryptocurrencies often dictate market sentiment, impacting the performance of altcoins and overall market capitalization. Analysts point out that the ongoing volatility presents both risks and opportunities, urging investors to remain strategic. The interplay between Bitcoin and Ethereum for market dominance continues to evolve, reflecting broader economic conditions and regulatory changes. As new developments emerge, traders are likely to recalibrate their strategies, navigating through the complexities of the crypto landscape. Looking ahead, sustained innovation in blockchain technology and potential regulatory clarity could drive further interest in these assets, shaping the future of digital finance and investor engagement. Institutional adoption of cryptocurrency is on the rise as more financial institutions explore digital assets. This trend marks a significant shift in how mainstream finance perceives cryptocurrencies, moving from skepticism to acceptance. Major banks and investment firms are now offering cryptocurrency trading and custody services, reflecting a growing confidence in digital currencies. This transition is largely driven by the need for diversification and the potential for high returns amid traditional market volatility. The influence of institutional players is crucial for stabilizing the market and fostering trust among retail investors, who often look to these entities as benchmarks. As institutions invest in cryptocurrencies, they bring substantial capital and expertise that could lead to more robust market infrastructure and innovative financial products. Furthermore, increased institutional involvement may prompt regulatory bodies to establish clearer guidelines, enhancing market legitimacy. In the coming months, we can expect to see how this institutional interest not only shapes the crypto landscape, but also influences evolving regulatory frameworks globally. The cryptocurrency market is experiencing significant volatility following recent regulatory announcements from various governments. These developments include proposed changes aimed at overseeing cryptocurrency trading and investments, which have left investors feeling uncertain about the future of their assets. The evolving regulatory landscape is critical, as it can either bolster or undermine market confidence among traders and investors alike. Historically, regulatory clarity has often led to price stabilization, while ambiguity tends to trigger sharp fluctuations. As authorities worldwide grapple with how to effectively regulate digital assets, the implications for market dynamics are profound. Increased regulation could lead to enhanced consumer protection, but may also stifle innovation within the sector. Analysts suggest that the current market reaction reflects a broader trend of cautious optimism, with some investors seeking opportunities amid the turbulence. As these regulatory discussions progress, stakeholders will be closely monitoring developments that could reshape the market. Looking ahead, the next few months will be pivotal in determining whether the cryptocurrency market can stabilize or if further regulatory actions will lead to deeper disruptions. Recent tracking of whales in the cryptocurrency market has revealed significant movements of large amounts of Bitcoin and Ethereum. These whales, or major holders of cryptocurrencies, possess the power to sway market prices through their substantial buying and selling activities. Historically, movements by these large holders have been closely monitored by analysts, as they can serve as indicators of market trends and investor sentiments. Notably, sudden whale activity might suggest growing confidence in the market or foreshadow impending volatility. As the crypto space continues to mature, the behavior of these whales is becoming increasingly crucial for understanding potential price fluctuations. Moreover, with the evolving regulatory landscape and heightened institutional interest, these movements can carry even greater implications. Investors are advised to pay close attention to the patterns exhibited by these whales, as they could provide valuable insights into market direction. In the coming days, it will be essential to observe whether these notable transactions will indeed lead to significant price shifts in the overall cryptocurrency market, shaping trends for the remainder of the year. Several emerging altcoins are gaining traction in the cryptocurrency space, drawing interest from both retail and institutional investors. These altcoins often offer unique features or solutions that differentiate them from established players like Bitcoin and Ethereum. For example, some focus on enhancing transaction speed or scalability, while others aim to address environmental concerns associated with crypto mining. As investors seek diversification in their portfolios, the rise of promising altcoins can lead to significant market shifts, indicating a maturation of the cryptocurrency ecosystem. Many analysts are closely monitoring these developments as they reflect broader trends in the crypto market, including increased adoption and regulatory scrutiny. The next few months may see an increased focus on these altcoins as they become more integrated into the investment strategies of crypto enthusiasts, potentially attracting institutional capital. With new projects launching regularly and technological innovations emerging, the landscape is continuously evolving, and investors must stay informed to capitalize on potential opportunities. Looking ahead, it will be crucial for investors to assess the long-term viability of these altcoins, as they may shape the future of digital finance and investment strategies. The total cryptocurrency market capitalization has surged to an astounding $27.9 trillion, marking a pivotal moment in the history of digital finance. This remarkable growth reflects increasing adoption and interest in various cryptocurrencies, driven by both retail and institutional investors. Over the past few years, the rise of decentralized finance, DeFi platforms, and non-fungible tokens, NFTs, has captivated the public's imagination, further propelling investment. Analysts attribute this surge to several factors, including advancements in blockchain technology, greater public awareness, and the ongoing digital transformation of financial systems. As the market continues to expand, it presents both opportunities and challenges for investors. The implications of this growth are significant, as it underscores the potential of cryptocurrencies to disrupt traditional financial models. For institutions, this market expansion offers a chance to diversify portfolios and innovate financial products. However, it also raises concerns about market volatility and regulatory scrutiny. Policymakers worldwide are grappling with how to create frameworks that protect investors without stifling innovation. Moving forward, stakeholders will need to navigate the evolving landscape, ensuring compliance with emerging regulations while capitalizing on new opportunities for growth. The next few years will likely be crucial in determining the future trajectory of digital currencies and their role in the global economy. Global adoption of cryptocurrency is accelerating at an unprecedented pace, with countries across the globe recognizing digital currencies as legitimate forms of payment and investment. This shift is largely driven by the increasing necessity for governments and financial institutions to adapt to the rapidly evolving landscape of digital finance. In response, numerous nations are implementing regulatory frameworks aimed at facilitating the use of cryptocurrencies, ensuring consumer protection while fostering innovation. Businesses, too, are increasingly accepting cryptocurrencies for transactions, signaling a significant cultural shift in how commerce is conducted. The implications of widespread crypto adoption are profound and far-reaching, potentially transforming not only how economies operate, but also how individuals perceive value. As more consumers and businesses engage with digital currencies, the demand for innovative solutions and robust infrastructure will inevitably grow. This evolution will necessitate advancements in security measures, accessibility for underserved populations, and enhancements in user experience within the crypto space. Looking ahead, the next phase of cryptocurrency adoption will likely focus on integrating blockchain technology into everyday financial transactions, making them more seamless and efficient. This could lead to increased financial inclusion and empower individuals in emerging markets. As the landscape continues to evolve, it is clear that the future of finance will be intricately linked to the advancement of cryptocurrencies and their role in a digital economy. Thank you for watching today's top stories. Which story surprised you the most? Let us know in the comments. Don't forget to like and subscribe for more updates every day.